Hello and welcome to this video where I'll be looking at some of the rules and computational issues around share pools for capital gains tax purposes. So we will be focusing on individuals here. My name's Aileen Edgar and I'm an expert tax tutor. Shares can be examined across a number of different areas of the syllabus, but today we're focusing on capital gains tax and how we deal with the taxation of shares where we're buying and selling different amounts over time and perhaps receiving free or extra shares. The content covered in this video is based on the TX UK syllabus, but it's also assumed knowledge for the advanced tax syllabus, so will be relevant to you whichever exam you are preparing for. One of the key concepts to be really confident in is what we refer to as the identification rules, or you might hear these called matching rules. Now, this is a set of rules that have to be followed in a certain order when we're working out a gain or a loss on the disposal of some shares. Before we look at the specific rules, you need to think about why we have these seemingly complex steps in place. When we sell a table or a chair, it's pretty obvious which table or which chair has been sold. But when we sell a share, there isn't anything to really distinguish it from a different share that we might own in that same company. And when we're working out a capital gain or a loss on a disposal, then we need to know the cost of the item we've disposed of. The proceeds is the easy bit. But how do you know what cost figure to use for shares if you've bought lots of them over the years? Well, this is where the identification rules come in to help us. When shares are sold by an individual, we need to first check to see if any shares were bought in that same company on the same day as the disposal we're trying to work out the gain for. Now, that might feel a bit odd, but it can happen that people buy and sell shares in the same company on the same day as they respond to changes during that day on the market price. One thing to note here is that it doesn't matter when on that day the shares in the same company were bought. It could be before the sale of the shares or after. If there are some shares that were bought on the same day as the disposal, then we're going to say that the ones bought today are the same ones that have been sold today. And so we'll use the cost of today's purchases as the cost in the gain computation of the ones that we've sold today. But what if there aren't any bought today in that same company? Or perhaps there were only 50 bought, but we sold 100 of them today. We'd need to move on to identification rule number 2, which is to look at the next 30 days after the sale of the shares and see if there are any purchases of shares in that company in that period. If there are, then we're going to match some of our disposed of shares up with those purchased ones in order to get a cost figure. This probably seems like a very bizarre rule, but the reason it exists is as an anti-avoidance measure, and it's intended to prevent someone from selling shares today and, say, realising a capital loss as a result of selling them for less than they bought them for, and then rebuying the same shares, say tomorrow or next week. Once you've checked the next 30 days, and if you still have some shares that have been sold today but not been matched up to a cost figure from step 1 or step 2, then you can move on to step 3 and look at all the shares that were bought in the time period leading up to today's sale. These shares will all be grouped together in a share pool, and we work out an average cost for the shares in that share pool. Before we look at share pools in more detail, let's just look at an example of the share matching rules. We've got Wilfred, who disposed of 200 shares in Traitor plc on the 1st of July for £4 each. On the same day, he'd purchased 50 shares in the company for £2 each. He bought a further 10 shares in the company on the 8th of July for £1 each, and another 5 shares in the company on the 15th of July for £1.50 each. How would the shares disposed of be matched up in order to work out the gain or loss on their sale? So we are trying to match up the 200 shares that we have sold on the 1st of July with other shares that we have purchased so that we can get a cost figure for the 200 shares that we've sold. The identification rules state that we have to, first of all, check on the same day, have we bought any shares in the same company? Yes, we have. We bought 50 shares at a cost of £2 each on the 1st of July in the same company. So we'll say that 50 of the 200 shares we sold on the 1st of July are these 50 that we bought on the 1st of July. So for 50 of the 200 shares, we would use a cost figure of £2 each and deduct that from the proceeds figure of £4 each to work out the gain on the disposal of those 50 shares. But we still have 150 shares left that we've not got a cost figure for. So the identification rules state that we now need to look at the next 30-day period. This is on a first in, first out basis. So we first of all look at the shares bought on the 8th of July and we match those 10 shares up with the 10 of the shares we sold on the 1st of July. And therefore we would use £1 each for the cost of 10 shares that we sold on the 1st of July. We've now matched 60 of the 200 shares up to get a cost. Finally, we look at the 5 that we bought on the 15th of July and match those with 5 of the 200 that we sold on the 1st of July. So that for those 5 shares, we'll use £1.50 as the cost against the £4 proceeds figure. That then leaves us with 135 shares left that we haven't matched up yet, and we would move on to identification rule 3. And we would look to match them with any shares that were purchased before the 1st of July, held collectively in the share pool. So, recapping some of the main points about the matching or identification rules for an individual. We're trying to match up share purchases with the share disposal that we're looking at in the question. Why? Because we're trying to find that cost figure so that we can use it in a capital gain or loss computation. And we'll need to do a separate gain or loss calculation for each application of the rules, whether we're looking at same day purchases, purchases made in the next 30 days, first in, first out basis, and each of those separately, if they've got different costs, we're going to have to do separate gain or losses calculations for each set of shares that we've matched, and also then part 3 where we're looking at the share pool. So a separate gain or loss calculation for each time that we've applied the rules to some of the shares that have been purchased in the same company, if we've matched up shares that we've disposed of with those shares. When we're working in a share pool, it's best to set it out with 3 columns. One to list out the transactions, so that's the purchases, sales, any rights issues, bonus issues. A second column to keep a track of the number of shares being added or taken out of the pool. And then the third column should be where you keep a track of the cost of each of those items. So you can see here in this pro forma, we've got a couple of purchases. We're adding up to get a total number of shares and a total cost prior to the disposal of some of the shares out of the share pool. We deduct that number of shares out of the share pool to get a remaining balance to carry forward to any future calculations. And the figure highlighted in yellow is that cost figure that we need for the shares that we have disposed of that we are trying to then use in our calculation of the capital gain or loss on the disposal of those shares. We'll look at an example of how to do this with numbers in a few moments, but there is a bit of arithmetic you're going to have to do in order to work out that cost figure. And so there's this formula that you can commit to memory that will help you with that. So in order to arrive at that highlighted figure on the previous slide, we're going to take the total cost to date in the share pool before we disposed of any shares that we're looking at, and we're going to multiply that cost figure by the number of shares that we are disposing of divided by the number of shares that were held before the disposal. Now this will make more sense once we put some numbers to it, but it's an important bit of arithmetic to bear in mind when we go on to look at the example shortly. Now let's look at an added complication we might see which is where we have acquired some additional shares in the same company, either for free or by taking up a right to buy extra shares. And then we'll look at a calculation with a share pool. A lot of the criteria for a bonus issue is the same as for a rights issue, but there are a couple of important differences, as we will see. A bonus issue is where a company offers existing shareholders free additional shares in proportion to their existing shareholding. So the shareholder is not going to pay any money for these shares. Whereas when there's a rights issue, the company offers existing shareholders the right to buy additional shares in proportion to their existing shareholding, so there is a cost to the investor here. Whether there's a bonus issue or a rights issue, these shares that are acquired are treated as if they were acquired on the same day as the shares that gave access to those additional shares. This is important when we're looking at applying the share identification rules that we saw earlier. When you're adding these shares into a share pool, with a rights issue, you will add the cost into the cost column, but you won't add anything into the cost column for a bonus issue, because remember, the shareholder is not paying any money for those bonus shares. In both cases, you will add the number of shares acquired into the number of shares column to keep a track of the total number of shares in that company that the investor holds. Let's look at an example now with bonus and rights issues. Maddie had the following transactions in Winkleman Limited. In January, she purchased 3,000 shares for £5,000 in total. In February, there was a bonus issue of 1 to 2. This means that she gets a free share for every 2 shares she already owns in that company at that point in time. In March, she purchased 1,000 shares for a total of £2,000, and in April there was a rights issue of 1 to 4. That means she has the right to buy 1 additional share for every 4 she already has, and it will cost her £2 per share for the new shares. In May, she sold 2,500 shares for £16,000 in total. And we're being asked to work out what is the gain or loss on the disposal of these shares in May. So you can see in my answer here, I've set it out using a table format, and that really helps with a share pool. On the left-hand side, we've got the transactions listed out, and then we've got 2 columns here on the right-hand side, one for the number of shares and one for the original cost. So if we take it chronologically then, in January she purchased 3,000 shares in the company and that cost £5,000. So we put 3,000 in the number of shares column and £5,000 in the cost column. In February we had this bonus issue of 1 to 2. So 1 free share for every 2 she already has. So that means she already had 3,000 shares at this point. So for every 2 shares she's got, she'll get an extra 1. So that means she gets an additional 1,500. 1,500 shares at no cost though, because remember, bonus issues are free. Keeping a running total of the number of shares and cost is a useful thing to do in your share pool. So we now have 4,500 shares in the company and a total cost so far of £5,000 to Maddie. March, she purchases 1,000 shares for £2,000 in total, so we put £2,000 in the cost column and 1,000 in the number of shares column. Keep a running total. We've now got 5,500 shares in this company, which has cost Maddie to date £7,000. Then there's a rights issue, and that's based on the number of shares she has at this point in time. So she has 5,500 shares. So for every 4 shares she's got, she has the right to buy an additional 1 share at £2. So taking up her full rights, she will end up having 1,375 extra shares, and that will cost her £2 each, so £2,750 goes in the cost column. A rights issue does cost the investor money, so she has to put something in the cost column. Totaling these up then, we've got 6,875 shares now in this company and a total cost of £9,750. Then we get to the point in time when she sells some shares. She sells 2,500 of her 6,875 shares, so that's why we deduct the 2,500. And then we have to work out the cost of those 2,500 shares. For an individual, we're going to take an average of the cost. So how we do that is shown in the working here. We've got 2,500 shares that we're selling out of a pool of 6,875. If we then multiply that by the cost of the 6,875 shares, 9,750, we get the proportion of the cost that is allocated to those 2,500 shares. That's where the 3,545 figure comes from. So 2,500 shares divided by the total pool of 6,875 multiplied by the total cost of those 6,875 shares, 9,750. That gives us our missing figure of 3,545. That's the figure we actually want in order to do our gain or loss calculation of the disposal of the 2,500 shares. For completeness, we balance everything off at the bottom. She's still got 4,375 shares in the company with a total cost of 6,205. But it's that figure highlighted in yellow that we're interested in. So we take that 3,545 figure, we deduct it from the proceeds of the 2,500 shares she's disposed of just now. So 16,000, take away 3,545, and the gain on the shares she has disposed of in May is £12,455. Now, if you need to revise these CGT share computations and rules further, then you can find some fantastic free resources on the ACCA Study Hub. If you're looking specifically for further details on the topics we've discussed in this session, then I recommend you have a look at Chapter 14 of the TX Study Hub. This chapter covers the identification rules, bonus and rights issues. Question practice is so incredibly important in preparing for your TX exam, so make sure that you have a look in the quizzes section of the Study Hub for a quiz covering a number of different aspects of shares. There are some revision questions as well, covering a number of different issues, including those identification rules and share pools. Thank you for watching, and I hope this session on some of the rules and computations around share pools has been helpful in supporting your revision of this area and preparation for your exam.